Hey there YouTube. So for this video I wanted to cover a common topic I see now, which is if I'm making money through a freelance website, how do I report the income and my expenses on my tax return and pay taxes? What obligations do I have? Well, Fiverr is the one example we're going to use here, but there are a lot of these different platforms out there. Fiverr is certainly one of the most popular, but there are many. Too many to list and count. But basically, if you have a freelancer profile on Fiverr or one of these other platforms, you're going to be considered an independent contractor for federal tax purposes, which means that you are not an employee of Fiverr, nor are you an employee of the person or the companies or the businesses on the other side that are hiring you to complete these tasks through the platform. Okay? So what that means is, as an independent contractor, you are the one that's responsible for doing all your tax filings and paying all your taxes. Okay, now this is in contrast. So let's say if you're a true employee somewhere, the employer issues you a W-2. They have to withhold taxes, both federal income taxes, maybe state taxes, and they also withhold payroll taxes on your wages. That does not happen here when you're an independent contractor. So for when you go to set up your profile, this will really drive how you do your tax reporting. So for U.S. persons that set up a Fiverr profile, Fiverr is going to request that you provide a W-9. That's the withholding certificate, and this W-9 is used to identify yourself as a U.S. person. So you're going to have to provide your tax classification, right? So are you an individual, a C corp, S corp, partnership, and so on. You also provide your U.S. tax ID number and your address. Now, if you're a non-U.S. person setting up a profile, you're not going to complete a W-9 because you're not a U.S. tax resident, right? Nor are you a U.S. person. So in that case, the more appropriate form for you is going to be one of the W-8 series forms, right? So W-8-BEN is for individuals, foreign persons. W-8-BEN-E is for non-U.S. corporate entities. And then a W-8-IMY is used for foreign partnership entities or other flow-through entities. Now, Fiverr is required to issue you and provide a copy to the IRS a Form 1099-K if the freelancer receives over $20,000 in gross payment transactions during the year and has more than 200 transactions through Fiverr. So if you're a freelancer, let's say you're a new freelancer, or even if you're an existing one for a while, but you never hit those numbers, you might not receive the 1099-K, but you still have to report the earnings, right? Because the 1099-K is a reporting obligation on Fiverr. It doesn't change your responsibilities as a U.S. taxpayer. So, so that's very important to remember, right? Just because you did not get a 1099-K, do not ignore your tax filing responsibilities. If you have income, you have to report it. This is Section 61A of the Internal Revenue Code, right? U.S. persons have to report all their income from whatever source derived. But as a contractor, you report your income and you could take deductions in computing whatever your net taxable income is. So let's get into how all this is reported. Well, how you report your income and your expenses for your taxes is really going to depend on how you set up your profile and how you completed that W-9. So the most basic profile setup is just a sole proprietorship. So if you set up your profile and you set up in your name as an individual and you use your social security number, the earnings are just attributed to you personally, directly as a sole proprietor. You report all these earnings on Schedule C of your Form 1040, right? It's very, very basic reporting. Where it gets a little tricky is if you're trying to launch a profile, set up your profile using an entity. Right, so as an independent contractor, you're allowed to set up an entity to conduct your business. So if you set up an entity and create your profile using the entity, it changes a little bit. Now, if you have an LLC, this is the most popular structure also, I would say. So single member LLC, that is a disregarded entity. What does that mean? If you set up an LLC and you own 100% of the company, it is by default a disregarded entity for federal tax purposes. That means that when Fiverr issues the 1099-K or when they ask for a W-9, you have to completely disregard the LLC name and EIN, and it's basically still being set up in your personal name, which is okay. You still have the LLC as your business name. You still have that liability protection, assuming everything else is done right. But the idea is for federal tax reporting purposes, it's as if you're a sole proprietor, right? So you get the same kind of tax reporting as above. Everything goes on Schedule C of your Form 1040. Now, where you might have a separate filing obligation is if you have a corporate entity or if you have a single member LLC and you make either an S or a C Corp election. So what's common now is a lot of freelancers have learned that if you're a sole proprietor or a single member LLC that's disregarded, you pay self-employment taxes on all your earnings. So what they're doing is you're launching your profile as an LLC and you're making an S Corp election. Now, once you make the S Corp election, the 1099-K for Fiverr is now going to be issued to the LLC name and EIN because the S Corp is a separate regarded entity. It's no longer disregarded for federal tax purposes. So your earnings from Fiverr are now reported on an 1120-S, which is the S Corp return, and then you as the owner receive a Schedule K-1, which shows the net amount of taxable income flowing through to you. That's your line 1 ordinary business income. Now, if you have a single member LLC and you make a C Corp election, you still have a separate filing obligation, right? The 1099-K, again, is still issued to the LLC name and EIN. The earnings are reported on a corporate tax return, a Form 1120, and then the LLC pays the taxes directly, right? Because when you have a C Corp, remember, C Corps pay taxes directly because they're not flow-through entities. And then any dividend distributions that go to you as an owner are dividend income to you and reported on Schedule B of your Form 1040, and you pay taxes there. Okay. Now, these aren't the only options for entities you could set up. You could have, you could just set up a regular C Corp, then you would have the same kind of tax reporting here in 1120. Now, it's also possible to have a profile launch as a partnership, right? So if you wanted to launch a profile and you had an LLC where you own 90%, and then let's say your brother was working with you a little bit here and there, and he owned 10%. You would have a multi-member LLC that's treated as a partnership for federal tax purposes. So in that case, the earnings would be reported to the LLC name, EIN, and the entity would file a partnership Form 1065 return instead. Okay. Now, this last point here, very, very important to remember also. The 1099-K, all it does is report the gross amount of payment transactions. That is it. There is no detail about what your actual net income or profits are. So when you get the 1099-K, that might be the gross amount of revenue you have, but remember, you have other trade or business expenses that you can deduct in computing your net taxable income. That's what you pay tax on. So you get the 1099-K, make sure to report your gross income, whatever that appropriate number is, and then do not forget to include all your trade or business expenses and other deductions that you're allowed to take to reduce your taxable income. Okay, so that covers it for this video. I hope that was helpful. If you have any questions, please leave me a comment below, and I look forward to seeing you again on the next video. Thank you.